It feels like everywhere you look these days, the financial world is changing so fast. Cryptocurrency's gone mainstream. People are demanding new financial tools, and it's not just about slick apps anymore. It's way deeper than that, isn't it?
Definitely. I think we're seeing a reevaluation of the very foundations of finance, like how we think about value and how we manage it is being challenged in a way we haven't seen before.
And that brings us to the big news we're diving into today. The EOS network's decision to rebrand itself as Vaulta. This isn't just a name change. They're aiming to build what they call Web3 banking.
It's ambitious. EOS had its technical merits, but it always felt like it lacked a clear connection to real-world financial use cases. With this rebranding and the focus on Web3 banking, they're making a pretty bold statement. It's a different strategy.
Yeah, it feels very much targeted at the current financial landscape. So what we're going to do in this deep dive is try to unpack this shift for you. We've poured over their announcement document, their vision, the trends they see driving this change, and we're going to pull out the most important pieces. The stuff that matters if you're following the evolution of finance and tech.
Think of it as cutting through the noise. Their announcement is comprehensive, but we're zeroing in on the critical questions. What is Vaulta trying to build with this Web3 banking idea? Why should you care about it?
So let's get into it. I guess the first thing that really jumped out at me was the timing. Like, why now? Why make this big move to Vaulta and focus on Web3 banking at this particular moment?
Yeah, their analysis highlights a few converging factors. Like you said, crypto is experiencing a huge surge in global interest. We're past the early adopter stage.
Right.
And alongside that, there's this growing public demand for innovative financial products. People are looking for alternatives.
And they also point out that some of the regulatory uncertainty that held back the space is beginning to dissipate. I think that's a big factor.
Totally. The lack of clear and consistent regulation has been a major hurdle for a lot of projects in the crypto world. As those frameworks become more defined, it creates a much more stable and predictable environment. They seem to see this as a window of opportunity to really push forward.
And they've even given us a tentative date, haven't they? The end of May 2025. They're planning to make this rebranding official, although they acknowledge things could change.
Yeah, that gives us a target, a real time frame for when we can expect to see this transformation play out. But what's really interesting is their argument that Web3 technology is already fundamentally shifting the way we approach finance. It's changing how we interact with assets, with capital, with the entire system.
Okay, so let's get into those fundamental changes. They highlight three major trends that they see shaping the financial world. First is the move from geographic attachment to global access. This seems to play directly into the borderless nature of crypto.
Absolutely. They point to this incredible growth in global crypto adoption, a 34% compound annual growth rate since 2020. They're projecting over 600 million users by the end of next year, which is up from 100 million just a few years ago. It's pretty remarkable.
Yeah, I think it's younger people, the 18 to 34 demographic, that are leading this charge, right?
Yeah, they're a big part of it. But Vaulta also points to what they call the long tail population, people who've historically been underserved by traditional financial institutions. Their data suggests Web3 adoption is happening much faster in that segment, maybe even 10 times faster.
Which creates a huge opportunity, right? You have this large global user base for crypto, and they need financial products that are tailored to them. That's a big gap to fill.
That's the bet Vaulta's making. They see themselves stepping in to provide that access with their Web3 banking ecosystem. They're aiming to offer financial services that are globally accessible and aren't limited by traditional geographic barriers.
The second trend they highlight is the shift from pipeline friction to the Internet of Value. This seems to be about making transactions more efficient and less costly.
Yeah, streamlining the flow of capital. They talk about the growth of the stablecoin market, which they project to reach nearly $190 billion annually by 2026. And stablecoins, which are designed to maintain a stable value relative to fiat currencies, are really important for facilitating everyday transactions in the crypto world.
And the impact on fees and transaction speed is pretty dramatic, right?
Oh, it's huge. Think about international money transfers. Traditional remittance fees average around 6.5%. Vaulta argues that Web3 technologies can cut that down to less than 0.1%, with settlements happening in seconds instead of days.
So they're positioning themselves to leverage this new landscape of global capital flow, providing the tools to facilitate these faster, cheaper transactions.
Right. They want to be at the forefront of this Internet of Value, where moving money around the world is as easy and frictionless as sending an email.
Okay, the third trend they identify is limited tradability, shifting to infinite composability. This one sounds a bit more abstract.
It might seem that way, but the implications are pretty profound. This trend is all about the tokenization of real-world assets, or RWAs. It's about taking things like real estate, commodities, even artwork, and representing ownership of them as digital tokens on a blockchain.
And the projected growth in this area is insane. They say it's going to go from $310 billion in 2022 to something like $16 trillion by 2030. That's massive.
Yeah, tokenization is potentially game-changing. It allows for fractional ownership, which makes assets that were previously only accessible to the wealthy available to a much wider range of investors. It also makes these assets more liquid, easier to trade. And the infinite composability refers to the ability to integrate these tokenized assets into all sorts of DeFi protocols and applications.
So Vaulta sees themselves as a key infrastructure provider in this space, enabling the tokenization and trading of a diverse range of assets.
Right. They want to be the platform that facilitates this transition of real-world assets onto the blockchain. It's about creating a more interconnected and liquid financial system. The message is clear. Web3 is reshaping the foundations of finance.
Now, to help them navigate this ambitious vision, Vaulta's created a banking advisory council. This seems like a key step in bridging the gap between traditional finance and the world of Web3.
Definitely. Bringing together leaders from both traditional financial institutions and the Web3 space is essential. It's about establishing credibility, ensuring compliance, and setting a strategic direction. These advisors bring a deep understanding of existing regulations, risk management, the institutional needs, all crucial if Web3 banking is going to go mainstream.
And they've got some pretty impressive names on board. Lawrence Truong, the CEO of Systemic Trust and formerly the CEO of Binance Canada, he brings a lot of regulatory experience and expertise in crypto custody.
Absolutely. His background as a regulator and his experience leading a major exchange like Binance gives him a unique understanding of the complexities of this space.
And then there's Didier Lavallee, the CEO of Tetra Trust, Canada's first regulated digital asset custodian. His background in institutional crypto products and custody services from his time at RBC is clearly very relevant here.
Right. He brings that essential institutional perspective, understanding the security and operational requirements that big financial players have when dealing with crypto.
And then we have Alexander Nelson and Jonathan Rizzo from ATB Financial. They bring the perspective of a traditional financial institution that's already actively engaging with the crypto world.
Their involvement underlines Vaulta's commitment to working within existing regulatory frameworks and building partnerships with traditional finance. It's not just about disruption, it's about collaboration.
Lawrence Truong even has a quote in the announcement about the goal of democratizing financial access and bridging traditional finance with Web3 technology, specifically mentioning Bitcoin. Seems like a pretty clear sign of where they're headed.
Definitely. This isn't about replacing traditional finance, it's about enhancing it with the advantages of Web3. And Bitcoin seems to be a core part of that vision. Vaulta's also said they're going to expand this advisory council, bringing in more experts, so their commitment to this collaborative approach seems pretty solid.
So with this council in place, let's talk about the core of what they're offering.
Yeah.
The 4 pillars of their Web3 banking ecosystem. These are the key areas where they're focusing their efforts and building partnerships.
Yeah, these pillars provide a really clear framework for understanding Vaulta's value proposition. It's not just a blockchain platform, it's an ecosystem of services designed to change how we interact with finance.
The first pillar is wealth management. And this seems to be geared toward helping both individuals and institutions grow and protect their digital assets.
Yeah, the idea is to combine the strengths of centralized finance, CeFi, with decentralized finance, DeFi, to offer a range of opportunities to earn yield with enterprise-grade security. So it caters to a broad audience, from individuals to institutions looking to optimize their digital asset holdings.
They mentioned partnering with licensed custodians like Sifu, especially for institutions, offering yield on custodied assets. This CeDeFi model, combining centralized custody with decentralized earning potential, seems to be a key part of their strategy.
It makes sense. It addresses a major concern for institutions: the security and regulatory compliance of their digital assets. Partnering with regulated custodians lets them access DeFi-like returns within a more familiar and controlled environment.
And for individuals, Vaulta token holders, they're introducing Vaulta Diversified Yield, which aims to give them access to the types of quantitative yield strategies that were previously only available to big, sophisticated investors.
Right. And then there's the comprehensive Bitcoin yield facilitated through exSat, which we'll dig into more later. But the core idea is to turn Bitcoin into a more productive asset.
The second pillar is consumer payments. This is all about making digital assets more usable for everyday transactions.
Yeah, expanding the real-world use cases, especially in emerging markets, making it easy for people to use their crypto to buy everyday things.
They talk about rapid settlements and reduced fees utilizing their own blockchain, claiming transaction finality in under a second. That would be a huge improvement over traditional payment systems.
Instant transactions with minimal fees. That's a really compelling proposition for mass adoption. They also talk about Bitcoin yield lending, which would allow users to borrow against their Bitcoin yield without having to sell their Bitcoin.
That's a pretty interesting idea. It gives users liquidity without forcing them to give up their Bitcoin. And they're also focusing on expanding the network of merchants and services that accept digital assets.
Building out that ecosystem is crucial if they want to make this a viable alternative to traditional payment methods.
The third pillar is portfolio investment. And this one seems to be about integrating opportunities from both DeFi and traditional finance.
Yeah, bringing them together. Their partnership with Spirit Blockchain is important here. It enables fractional ownership of real-world assets like real estate and commodities. So you could potentially own a fraction of a commercial property or a share of a commodity through their platform.
That could really democratize access to certain asset classes that were previously out of reach for most people.
Right. And they're also focusing on the convergence of DeFi and traditional finance through structured yield products, stablecoin lending, and cross-chain integration, expanding the options for both retail and institutional investors.
The final pillar is insurance. This is obviously crucial in the crypto world where security is paramount.
As the adoption of digital assets grows, the need for robust insurance solutions becomes even more important. Their partnership with Blockchain Insurance, Inc., which they call the first association captive insurance for crypto, is a big step forward in this area.
It provides specialized insurance coverage for the unique risks involved with crypto, things like smart contract vulnerabilities and custodial risks. And they have some notable partners in this, like 3iQ and the Alberta Real Estate Association.
It's a sign that the crypto insurance market is maturing and becoming more sophisticated, providing a much-needed layer of protection for both individual users and institutions. These four pillars give a good overview of their strategic direction and where they see the most promising opportunities for Web3 banking.
They're really trying to position themselves as the financial network for Web3 banking. That's a pretty bold claim.
Yeah, they're differentiating themselves from other blockchains that might offer more specialized functionalities. They're aiming to be a fully integrated financial network.
They highlight features like 1-second transaction finality, strong compliance mechanisms, seamless liquidity, and of course the direct Bitcoin integration through exSat.
These are all essential building blocks for a financial network that can meet the needs of both everyday users and large institutions. The speed, security, interoperability, it's all there.
And their argument for why Web3 banking is the future is pretty compelling. It comes down to addressing the inherent inefficiencies of traditional finance, the slowness, the high costs, the geographic limitations.
Right. They're promising near-instant settlement, intuitive on-chain identity management, robust security, and a scalable infrastructure designed for institutional use. It's about building a more efficient and inclusive financial system.
To achieve this, they've laid out 5 foundational layers that they've already been building. The first one is connectivity, enterprise-ready, smart contracts.
This is about making sure their platform can talk to both the existing Web2 financial world and the burgeoning Web3 ecosystem. They're using C++ WASM smart contracts, which are known for their performance and suitability for traditional banking systems, along with EVM-compatible Solidity contracts, which allow them to tap into Ethereum's vast DeFi ecosystem.
So it's about creating bridges between the old and the new, making it easy for traditional institutions to interact with their platform while also being compatible with the existing DeFi space.
Exactly, maximizing integration and reach.
The second foundational layer is Bitcoin direct Bitcoin integration via exSat. This seems to be a core part of their whole strategy.
Yeah, they see Bitcoin as more than just digital gold. They want to make it the foundation for a whole decentralized financial ecosystem. Through exSat, they're aiming to turn Bitcoin into a yield-bearing asset, expanding its utility and leveraging its enormous liquidity. And the fact that exSat already has over $680 million in TVL shows, there's real demand for this.
And they have some serious players in the Bitcoin mining world, like Antpool and Via BTC, participating in exSat.
That involvement lends a lot of credibility and shows the level of interest in building Bitcoin-based DeFi solutions.
The third layer is data storage decentralized on-chain RAM database. It sounds like this is designed to tackle one of the biggest challenges for blockchains, handling large amounts of data efficiently.
Right. Traditional blockchains can be pretty slow when it comes to storing and retrieving data. Vaulta's decentralized RAM database is built to manage high-frequency transactions and structured data on-chain. This is essential for handling things at an enterprise scale. They use the example of exSat using RAM to manage Bitcoin's UTXO data. UTXO stands for unspent transaction output, and it's essentially how Bitcoin keeps track of who owns what. Managing that data efficiently is crucial for scalability.
So it's about making sure their platform can handle the volume and complexity of real-world financial applications.
Exactly. Efficient data management is essential.
Okay, the fourth foundational layer is interoperability, cross-chain liquidity, and seamless interoperability. In today's multi-chain world, this seems like a necessity.
Definitely. Vaulta is using the IBC protocol to enable the smooth movement of assets between different blockchains. They say they can handle over 10,000 transactions per second, which shows their focus on performance and integration.
Making it easy to move assets between different blockchains opens up a lot of possibilities, both for developers and users.
It makes the whole DeFi ecosystem more connected and more efficient.
And the fifth and final foundational layer is speed one's transaction finality. This is insanely fast compared to a lot of existing systems.
It's a huge advantage, especially for things like payments, trading, and real-time financial services, where speed is critical. Having near-instant finality reduces risk and improves the user experience.
So these 5 layers, connectivity, Bitcoin integration, data storage, interoperability, and speed, form the foundation of their goal to become the financial network for Web3 banking.
They're the building blocks for a modern financial system built for a decentralized world.
And their strategy for achieving this vision involves what they call a 2-track strategy. Can you explain what that means?
It's a two-pronged approach to address both the long-term infrastructure needs and the immediate needs of users and institutions. Track 1 is the Web3 Banking OS. This is about building out those enterprise-grade foundational layers: identity management, compliance, data storage, settlement layers, creating a robust operating system for on-chain finance.
And track 2 is democratized financial solutions. So this is about offering innovative products and services right now, both through their own development and through strategic partnerships.
Right. They're not waiting for the entire operating system to be finished. They're launching solutions that deliver value today. This two-track approach allows them to cater to a wider audience. Institutions can start experimenting with new solutions, while blockchain projects can leverage things like specialized insurance and compliant tokenization. Developers can build custom financial applications, and individual investors can get access to yield opportunities and tokenized real-world assets.
It's about driving adoption from multiple angles.
Yeah.
Building the infrastructure and the applications in parallel.
Exactly.
We've talked a lot about Bitcoin integration via exSat. This seems to be a key element of their strategy. They're even highlighting Bitcoin digital banking services powered by exSat.
Yeah, exSat is a perfect example of how they see Bitcoin evolving from digital gold into a dynamic, yield-generating asset within their Web3 banking ecosystem. They forked their EVM to implement exSat, essentially giving Bitcoin smart contract capabilities and access to DeFi functionalities.
So it's not just about holding Bitcoin. It's about putting it to work, generating yield through staking, delta-neutral strategies, even enabling instant payments and trading.
Turning a static asset into productive capital, and exSat's growth since launching late last year is pretty impressive. Over $685 million in TVL, thousands of Bitcoin staked, and major mining companies are involved. It's a big deal.
And it all ties back to Vaulta's underlying technology. The 1-second finality, the support for both C++ and Solidity smart contracts, the mixed VM, the decentralized data storage, it all comes together to make this possible without compromising Bitcoin security.
Exactly. They've created a specialized environment within Vaulta where you can do everything from retail micropayments to complex institutional strategies, all while leveraging the security of the Bitcoin blockchain.
Finally, let's talk about the Vaulta token itself, which was formerly the EOS token. This rebranding isn't just about a name change. It also directly impacts the token.
Right. They see this as an opportunity to ride the wave of growth happening in crypto, especially in stablecoins and RWA tokenization. They point to the existing strengths of the EOS token: its accessibility, liquidity, brand recognition, the fact that it's included in indexes like Coinbase's QIN 50.
And they lay out a bunch of reasons to hold the new Vaulta token. The potential for attractive yield through staking seems like a big one. They've allocated 250 million tokens for staking rewards, with a current APY estimated at around 17%.
It's a pretty good incentive. And then there are the advanced yield strategies via SIFU, which will give token holders access to institutional-grade yield opportunities without having to give up custody of their tokens. Again, that CeDeFi approach.
Staked token holders can also participate in network governance, voting for block producers and shaping the future of the network.
Empowering the community is crucial in a decentralized system. They also talk about the asset flexibility and interoperability facilitated by the token, allowing for easy movement of assets across different blockchains.
And the concept of exclusive access to a strategic blockchain resource, in this case RAM, sounds interesting. As more projects like exSat launch, the demand for RAM will likely go up, potentially making it a scarce and valuable resource.
Yeah, it's a unique aspect of their tokenomics. It ties the value of the token to the underlying demand for resources on their platform. They also mention decentralized trading through their upcoming DDEX, 1DX, and exclusive investment options in tokenized real-world assets.
So holding the Vaulta token could give you access to a lot of potential benefits within this ecosystem. The token swap from EOS to Vaulta is scheduled for the end of May 2025. There will be a 4-month window for a bidirectional swap through a platform called Unicove.
It seems like they've got a pretty solid plan in place for this transition.
So to wrap up our deep dive, Vaulta has laid out a very ambitious vision for Web3 banking. They've got some strong foundational layers in place, they're building key partnerships, and they're taking a really innovative approach to integrating Bitcoin through exSat. The new Vaulta token seems poised to play a central role in this ecosystem.
It's definitely a sign of the times. We're seeing the convergence of traditional finance and these new decentralized technologies, and they're trying to build a complete financial network built for the Web3 world. It's a big undertaking.
It is. Considering all of this, what do you think? What's the biggest potential disruption or opportunity for how we interact with our finances in the coming years?
You know, that's a great question, and it's really tough to say for sure. But one thing that really stands out to me is the potential for Web3 to change how we think about ownership, not just of financial assets, but of data, of digital identity, of our place in the digital economy. Vault is focusing on the financial side, which is huge, but I think this shift toward decentralized user-controlled systems has implications far beyond that. It'll be interesting to see how it all plays out.
Absolutely. It's a space to watch, that's for sure.
Yeah.